Dogecoin's price is going to continue to tank until June. Today we're going to do an advanced price prediction using technical analysis, and today you're going to see exactly why. With that said, let's dive straight in. All markets are driven by crowd psychology. The best method that I found over the last few decades is Elliott wave theory to read the pattern position of the markets. And what you need to know, advanced technical analysis, is fives and threes. In other words, markets typically move in a 5-wave impulse. That's what we're seeing on the left-hand side, followed by a 3-wave correction. Now, where is Dogecoin in regards to this buying and selling behavior? Well, let's look at the live price data now on the right-hand side and do an updated Elliott wave count for this position. You can probably see it here. We've got this initial move up, wave 1, correction, wave 2, a nice impulsive wave 3, a textbook wave 4, followed by a wave 5. So now you've got a good feel of where is Dogecoin in its pattern position. It's at the end of a wave 5. Now, what typically follows a 5-wave sequence is a 3-wave correction. Now, I told you June, right? June is the date you want to be really aware of, but why? Well, what we're going to do is we're going to measure how long did the 5-wave sequence take for Dogecoin, and then we're going to project forward the typical time taken for a correction to complete. This is called Fibonacci time analysis. The key ratio you want to be aware of is 38.2%. So we're going to measure this beginning of wave 1, end of wave 5. And we've got two key ratios. Again, I've said the 0.382, which is 38.2%, and the 61.8% as well, which is 0.618. These are two key dates. Why is this really significant and you should take incredibly seriously? Because the markets are quite predictable in terms of buying and selling psychology. And a typical correction takes 38.2% of the time. As in, that's how long the correction takes. But it's around 70 to 90% of the time this unfolds. So what does that mean in terms of the date? Well, the minimum expected time for the correction is into June. We're talking about early June, the first week of June. Now, does that mean the correction cannot complete before then? No, it doesn't. But we're looking at high probability setups. But what about price position? How deep should the correction be? What's the typical? Well, there's three key ratios. Now we're going to do some Fibonacci price analysis. Let me just show you what we're going to do. We're going to measure the full 5-wave move to the upside, and we're going to do a retracement. And there's three common ratios that a wave 2, as in this is like a first impulsive move up, call it a wave 5 over wave 1, and we're anticipating a 3-wave correction for a wave 2. The ratios are 50%, 62%, and 78.6%. What this allows us to do is have a very accurate, high probability time and price zone. So with Dogecoin, it is likely that the price is going to go below 14 cents, if not even test the 10-cent mark. And it's going to go on more than likely towards June. So even if this price is hit down here, don't be fooled thinking that the correction is over. It's likely we'll get a leg up, which we called a wave B, and then we'll get another sell-off. That's the most common minimal behavior of buying and selling psychology. What we're going to do next is now do some price projections. Price predictions in forecasting into the future to say if this correction does occur, what is the next leg up? Because this is where the next buying you want to be doing is down over here when it's looking a bit more pessimistic, as in getting a better price and not buying up here. You want to try and avoid buying at the top of a wave 5 because that's where a correction literally begins. Before I jump into that, I want to let you know I've built a new masterclass that teaches this. So you can do this yourself for all markets and all time frames. We're talking about pattern, price, time, and a momentum analysis. So you get a strong technical edge and you can really read the buying and selling psychology of any market. So you know when you should be buying, when you should be standing aside, and when you should be selling and taking profits. This is in the description link below. Check it out. Putting over 100 hours to put this together. You get a lot of value from it. So now let's go over to Dogecoin and do our price projections of the next move up that's highly likely. In order to do the price projection, we're going to just need to make a few assumptions. Let's just say we do get an A, B, C correction and it completes like this. And what I want to draw up here is that we're referring to this as a higher degree wave 1. And I just want to make it a bit clearer up here. And then what we're looking for is a higher degree wave 2. I always like to put a question mark beside it to say we want to wait for a confirmation signal. Again, nearer the time, if it unfolds like this, we'll do an update video to say, right, it's in a position to complete a wave 2. But if this does unfold, what should we anticipate next for Dogecoin? Well, let's squeeze this in, because what you really want to be aware of, which is really, really important, is Dogecoin actually up here, or is it actually making a 5-wave move of a wave 1? Now we're anticipating a wave 2 up down here, and then we're going to anticipate a larger degree wave 3. That's actually the case, because if we just zoom out with Dogecoin and just look at where are we in this whole price cycle, we believe that this is the beginning of a new trend. And we've seen that with Bitcoin and everything else, so we can take that with quite a bit of confidence. As long as this low does not get exceeded and we get some type of healthy wave 2 correction, even if it does get down to the 10-cent mark, that's still okay for a correction, because we're going to anticipate the next leg up. So I'm going to do this relatively fast, but I teach it in my masterclass how you can do this yourself. Is the key ratios you want to be aware of is 1.618. What we're going to do effectively is we're going to measure the wave 1 move to the upside, and we're going to project from here 1.618. So let's do that. We're going to use, I'll show you how to do it on TradingView. It's called the trend-based fib extension, and we're going to do 3 clicks. The first click, second click, and then the third click. The key ratio that we want is 1.618. And we're talking about maybe a 40-cent Dogecoin. That's the typical. It's probably going to overextend, being a meme coin, being crypto, and if that really, really takes off. But the typical wave 3, and I'll draw it like this so you get a bit of a ballpark feel of what to anticipate, is over here. And then there's some other price projections as well. How long should these take? Well, we can get a bit of a ballpark feel of how long did this initial 5-wave move take, and we can project forward 100%. And then what's the typical maximum? So if we go to low to high. And what this does for us is it allows us to get a ballpark feel. So the next course of action for Dogecoin, if you haven't done so already, depending on what your strategy is either be prepared to hold through a correction. If you're looking to load up, wait for an obvious end of wave 2, and then ride the next wave 3 if it does occur, and then be very aware of the next top. And if it's there, then look to be locking in profits, because after a wave 3, typically what comes is a wave 4. A wave 4 is a profit-taking wave, and we want to be aware of that. We've seen that very recently, and let's just finish on this actually, just to confirm what we just said. This wave structure over here was a micro degree wave 4. That's a profit-taking wave, and that tends to happen on a larger degree also. Now you have a clear game plan for Dogecoin. Let me know how you found today's video, and let me know what you want me to look at next. And make sure you subscribe to the channel, because I'm going to do a lot more updates on price predictions based on high-level technical analysis, which I've been spending the last 18 years doing for all markets and all time frames. But it's really, really prevalent when it comes to cryptocurrency. Until then, I'll see you next time.